please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Move on and talk about some numbers then. Thermax posted a mixed set of earnings this quarter. Revenue growth was better than expectations, but margins disappointed. MS Unnikrishnan, the MD of Thermax, joins us now to talk about that. Mr. Unnikrishnan, if you can just start off by telling us what the order inflow is looking like. Have things picked up on the ground at all? Are we seeing, nascent signs of a capex cycle recovery?
The line is getting cut.
We can hear you, Mr. Unnikrishnan.
Sonia,
go ahead.
Yeah, there is some problem with the line, so get that organized. In any case, I hope you're able to hear me.
Yes.
Sonia, it is not a mixed quarter. It's a good quarter for us. Because in the most difficult circumstances post the GST implementation, we have been able to lift our revenues by a 14% as Thermax group level. I agree with you that the profit expectation from the market could have been a little higher. We had difficulties with two of our overseas subsidiaries, of which one of them will certainly go back to really positive and compensate for the negative of the current quarter. One may still continue, is already anticipated. Equally important for us to convey to you is that our order intake in the current quarter also continued to be very positive. And at this point of time, for the first 9 months of the current year, the entire order intake has gone up by a 47%, which is even beyond the expectation that all of us had. This has lifted our order carry forward, that is order book, by a 27%. That's a positive news, because this is going to be helping us to get into the next year with a better carry forward, means a very good year for the FY19. So that's the overall thing to comment about. And inquiry pipeline is also improving. So we are seeing some amount of an improvement across the globe, including in India.
Okay, well, actually, Mr. Unnikrishnan, that's exactly what I wanted to ask you. Revenue is actually very good, up 15%, double digits, and order inflow. Is this a maintainable run rate? What are the vibes you are getting from the market, the inquiry market?
The consumption-oriented sectors have started really placing orders without any worry about the forward election or the economy across the sectors, all sectors in the country. Even in the medium-sized projects, we've seen a traction in chemicals industry. We are going to be seeing some traction in the fertilizer industry. We have picked fairly large number of orders from the refinery sector in the current quarter letter for the Bharat VI quality improvement program of the refineries. We have inquiries already received for two of the fresh refinery expansion programs. So that way, selectively in the larger project segment, I am seeing an improvement. And added to this is positive news coming from North America and Europe together is giving a kind of investment climate improvement across the globe. Despite the crude oil prices going up, I don't think the developing countries are unduly worried about. Even with all the political instability, we are receiving inquiries from the Middle Eastern sector also. So the negatives that we were worried about in the last quarters looks like are tapering off, and we should look forward to something better in the coming year. That's the overall take, Lata.
Just stay on, Mr. Unnikrishnan, just stay on. I want to ask you about margins as well. But before that, let's head back to the Auto Expo. Ron is in conversation with the management of TVS Motor.
Really not able to predict at this point of time. Okay. But we are sure that this is something which is likely to happen. India is progressing pretty well.
Okay. Now you've also shown now the GTR ethanol over here. I think Mr. Gadkari will be very happy because he's one person who's been talking a lot about the viability of ethanol. And you were telling me just now that this is a concept, but this could hit the markets. Just throw some more light.
I think this can be available for the market launch. This is one of the finest bikes we have. And definitely it will do well.
Okay. So when do we see it? Have you decided on the timeline? Because I'm sure a lot of things will have to be in place before you do this.
We have to work out the other requirements in the market.
Okay.
But product-wise, we are ready.
Okay, let's talk about your NTORQ, which you've just recently, launched 125cc. We've seen your overall market share in the scooter segment is what now, about 16%, 16.5%, up from 14% last year. So is there more headroom to grow now with this new offering that you have?
NTORQ should be somewhere.
Yeah, it's somewhere. Let's walk there and we can talk. Yes.
Ntorq is, I think it is positioned for the Gen Z.
Right.
And it is a very young, it's focused on youngsters, not only in India, globally, and it has got so many features.
Okay.
And it is one of that kind which will definitely delight the young customers.
It looks like a good product, and but the pricing has come in slightly. The base price is slightly below 59,000. One thought, since you have such a strong incumbent in this category, the pricing would have been more aggressive. How do you look at that?
I think pricing is only one element. I think what is more important, according to us, is the product. And this product has got 125 3-valve engine, very stylish, and it will definitely connect with the youngster. There is a Smart Connect first time in this category, and first time in India in scooters, and we are looking at something like 200,000 in the first year.
200,000 in the first year. Because I remember I heard you at the press conference, you said that you are seeing a bit of a premiumization of the market, and that's...
Okay, that's Mr. Radhakrishnan. He said the word young many times. That's because young and aspirational, those are the two buzzwords for TVS Motor in their new product line. Ever since Sudarshan Venu has taken over as the MD of the company from his father, Venu Srinivasan, he's really focusing on making this a brand for the new generation. But let's get back to a conversation with Mr. MS Unnikrishnan, the MD of Thermax. Mr. Unnikrishnan, you know, while the revenues have been very good, the reason we were a bit worried is because the margin pressure has creeped in. This time your margins were not only lower than estimated, they were also lower than last quarter. I'm just trying to understand whether the top line growth is coming at the cost of some amount of margins.
In capital goods industry, it is a quarter can have a setback on account of certain specific orders having cost overruns. It is no indication of a generic nature. My expectation is by the end of the year, we should be able to catch back. Next quarter, you could bounce back to the same levels that we were in. Though I need to be admitting, there is a cost pressure overall on account of the fact that the commodity prices, especially the steel prices, have risen by almost 40% the last 1 year. And the ability of all of us in the market to pass it on to the customers, it has come down on account of the fact that it's not a seller's market at this point of time, it's a buyer's market. So they got options available. So any input cost increase cannot be passed on in the same proportion. So there is a margin pressure, but not to an extent which should become worrisome for us or anyone in the market.
All right. Thank you very much, Mr. Unnikrishnan, for spending time with us. Important to note the positives that you have put on the table, that consumer companies have started giving orders on capex without worrying about elections and other events. But that bonhomie is not spread to other sectors. That's an important takeaway. We take a break on that note, but coming up, there are lots of results reactions lined up for you. Immediately after the break,